Good morning, everyone, and welcome back to TBD, your Colorado Springs real estate podcast. I'm Rob Thompson, associate broker with the agency here in Colorado Springs, and I'm joined by my colleagues.
Laurie, Ristig, also with the agency.
And my name is Mike, and I'm with Total Lending Concepts.
Welcome back. So today we're going to talk about things to do or not to do when you are under contract from a lending perspective. And things that can, I think Laurie categorized it as things that can kill your loan.
Yep, kill your whole deal.
Yes.
Okay, so this is just a reminder. It's a free-form discussion. We do have a site format where we do our intros. We'll do a market update. We'll talk about the stats for the market, our topic. We'll talk about where interest rates are headed with our magic 8-ball. And then we usually wrap up with a podcast, a book, or a website recommendation. And we're trying to highlight local businesses as well. So without further ado, what's the market looking like, Laurie?
So single family active, the total number of homes is 1,195 houses. And when you cut that down to ones that are existing, not, you can build this house, it's 833. And when you cut that down to $300,000 or less, there are 175 single family homes active on the market. So 175 total.
How many below 250?
For our... Oh, I didn't pull it up. Sorry.
That's okay.
So if you're looking in the 300 or less, there's only
Slim
175 of them in this town of 500,000. So,
wow,
It's consistent with this last weekend. I was at home shopping with a couple people, and 3 or 4 people at every given showing, and it just or 3 or 4 other agents, and there's always an awkward little dance, where they're like, "Oh, can I come in?" I'm like, because come on in. And so it's I'm not gonna lock you out.
Well, we were talking about how.
Do you have your iPads with you, and are you guys writing contracts while you're walking through the house?
Sometimes. I mean, I always have a laptop or my iPad with me. The way the contract software works, it's much harder to write on an iPad. But
is it? Okay.
Yeah, just the.
But you carry something where you can do it.
Yeah,
in the car or wherever.
Put it on the hood of your car.
To the office could cost you the house.
It sure could. It sure could. But yeah, always have the ability to write the kind, and I can do it from the iPad or phone. So can Laurie. But it's something I'll go out on the hood of the car if I have to and bust out the laptop.
I mean, it's a 19-page contract, so it's not. Let me just do this on my phone real quick. It's like,
Out of curiosity, how much of that is pre-populated?
A lot of it is because it's Colorado. The state of Colorado has their pre-formed format that you need to have things that have to be in every single contract. So a lot of it is fill in the blank, but it's a lot of it is fill in the blank.
It is. Now you can actually just cool segue here. You can create templates. So if you your date templates, I prefer not to do the templates because it forces me to step through every segment of the contract every time.
I'm the same.
So that I don't
you don't miss something.
I don't miss something, or I don't fall into a
make an assumption
trap.
And then you're like, oh, that's right, this one's a little bit different. I have this one thing, I need to change this.
Exactly why I do that. So I don't do any templates.
I did the same thing.
Yeah, great mindset.
Sorry, I kind of took us down a rabbit hole.
No, that's fine. Yeah. So it's an interesting point, though, too. The 15 minutes or 20 minutes or 30 minutes to transit to the office, could it cost you the deal? Historically, if you're the first offer, in this market, I've said to a couple people a couple times, first or third offer, it doesn't matter at this point because they're not going to.
They're looking at the most competitive offer.
Right.
Or they're holding it.
They're going to hold on to them for as long as they can to see how many other offers come in.
Now, Laurie, last week you mentioned a couple of solutions, a couple of options that could actually defeat that. So that's interesting. I really like the one that you mentioned. Hey, accept my offer now, and I'll add $3,000.
Throw in a couple thousand extra if you just accept it now and be done.
Otherwise, what was the other part of that? Otherwise, we'll submit a.
Oh yeah, so the offer you submit gives the deadline that they originally asked for, and you say you just kind of throw a note in there that says if you accept this earlier, we will give you an additional X number of dollars. And either you can just counter us right now and we'll accept, or we can resubmit this offer we have with the deadline that we wanted, basically, so they can choose.
Okay, I really like that strategy, so that's what I'm going to employ here in the future.
Yeah. I mean, it can't hurt.
To answer your earlier question, Mike, 52.
Wow, so that's 8 less than last week.
Where we at 60?
We were at 60 last week.
So there are 52 homes on the
Under
market, 250 or
Oh,
below.
under 250, you got it. You pulled it up.
Yeah, that's a metric.
That is bananas. Days on market too. So January average days on market was 13, which was starting to go up a little bit. February it was 9 days on market. Was the average. Median for January was $292. Median for February was $299. And average last month was $315,551, and average for February was $314,892. So the average has actually gone down, but the median has gone up. They're kind of meeting each other.
Reality and market sentiment are catching back up to one another. I pulled some stats too for just gee whiz too. I did year to date. So year to date, there have been 2,012 single family homes sold in El Paso County. $291,500 is the median price. $329,111 is the average price. 9 days on market is the median.
That's crazy.
34 is the average.
It's so low.
Yeah, that's tight and tough.
And rates have stabilized at the new higher level over the last couple of weeks. They're more or less the same.
So without getting political, there's been some last 24, 72 hours, some interesting developments. I think it might introduce another element of chaos into those rates. But we'll see. The other side of that is the efficient market hypothesis that nothing has changed yet as we sit here in the market means that maybe it won't change. But yeah. Oh, so okay, that's our market stats. Inventory remains historically low, and that's actually there's no chance that's going to change.
We need new builds. We need new builds.
Well, the thing with the new builds though is they're $400,000+.
Right, we need affordable new builds. Right. Oh, and I think it was yesterday. Like in the Broadmoor area, somebody had proposed building affordable housing of further south, and they were fighting city council, and city council voted them down. So now, if they want to fight it, they have to take it to court.
So city council overrode
yesterday. It was actually a pretty close vote too. It wasn't
unanimous. Did they approve the project or disapprove the project?
They said that a project continued to go through, and the thing that they slapped down and disapproved was them
objection.
saying, "Please don't put this in our neighborhood. We don't want affordable housing in our neighborhood."
Right.
So
they're worried about safety. I've read some about this, which anyway.
There's kind of a perfect storm of problems here. Geographically, our city is so spread out that the resources are strained. People can't build up because of the view and the ordinances for the view. And then people are the term NIMBY, not in my backyard, is one of the most common complaints I hear regarding NIMBY is appraisal values. Well, our appraisal value will go down, our property value will go down. Not necessarily, because appraisers are smart people and they take into account this 2018 subdivision.
Islands of neighborhoods and pockets, right?
Yeah, pockets of value.
They can look at what year was this built, what year was this built, what style is this, what style is this, and they can see that, this is from this area.
You can have a 2016 new build, that can visibly see a 1985 home that's the same square footage, and they can be different values.
Sure.
But so that's what's going on. Okay, that's our market update. Historically low inventory. Look at the last couple podcasts, or that last podcast we did, in this one, we've talked about, and we'll talk about strategies to be competitive in this market, because that's really all you can do. There's no affordable housing really on the immediate horizon. Okay, so today's topic.
You're willing to pay the most.
Yeah, that's what. Or we have had some successes in the last couple of weeks where people did accept, quote, rational offers.
Common sense.
But then again, it's not irrational to accept the highest price offer. But there are variables there. An offer that's $25,000 above what the house can reasonably expect to appraise for. If you accept it. If you accept it knowing that you're going to have to renegotiate appraisal, then that's a rational decision. If you accept it and
thinking that's where it's going to land,
then that maybe not irrational. But okay. So, our topic today is Mike centered, and it's things to do, not to do, or not to do when you are under contract. Things that can spike your loan. So what do we got?
Things that can kill your loan or stop you from buying the house that you bid for the 12th time to get.
My record is
14 times. And once you're under contract, do not do the following. Don't quit your job. I think that's obvious, but it does happen.
Why not quit your job?
Well, because that would affect your debt to income ratio, which will affect your loan, whether you qualify or not. We look at loans in terms of ability to repay.
What about switching your job? What if I get a job offer?
That's interesting because that was actually my next thing. That's okay.
My bad.
That's okay. Change employment type. You can switch jobs if you're a nurse and you go from one hospital to another hospital, and typically those come with offer letters. Then you're good. But if you go from being a nurse to, I don't know, going into a sales position at a car lot, I can guarantee you without a doubt that your loan will not fund based on that. Because you're going into an entirely different career field that is based on your ability to sell a car versus being a nurse, which you can transpose that job pretty much anywhere. I use that as an example. Don't deposit large sums of money that you happen to find under your mattress.
Why?
This one always puzzled me. I'm like, why would putting money into an account be a bad thing?
Well, and that comes actually from the Patriot Act, and they want to be able to source your funds. Mm-hmm. So, as I tell most of my borrowers in a joking way, what the Patriot Act is making me do is to make sure you're not a terrorist or a drug dealer. So, if all of a sudden $10,000 appears from under your mattress and goes into your account, I have to not only subtract that from your overall assets, I also have to report that to the government. There is a form I have to fill out that says, hey, guess what? This, and plus the bank does the same thing, but it's also in relationship to what I do as far as selling the house, but helping people fund their homes. If that happens, I have to report it as well. So,
what about if like grandma gives you $20,000 because she's old?
She better
and she
get
wants
you a
to...
check. She can't come out of her mattress and give you $20,000 in cash.
Even with a gift letter.
Even with a gift letter,
What if
it would have.
So
there is a strategy around that. Grandma could deposit that on Monday, and then on Wednesday, after it shows it's been deposited, I only need a snapshot of Wednesday when she gave you the money. Mm-hmm. But she can't just hand you $20,000 cash and you walk down to the bank and deposit that $20,000. Okay. That's just not going to work.
Otherwise, you're just a delayed closing by 60 days, right?
Yeah,
For seasoning.
Yeah. It has to season. So if you have a large stash of cash in your mattress, I would suggest depositing it today so you can buy we're in March. March 14th. So March. Is that April,
So would
May?
you say deposit that before you do your loan application?
I would say deposit that 61 days before you walk in and talk to me.
Okay. So
Yeah.
if you've got grandma's going to give you money or something,
You better
explain to her
deposit that right today, and then come talk to me on May 16th.
Okay.
Yeah.
Interesting. Okay.
Yeah. As long as it's been seasoned for 60 days, we're good. So,
All right.
but don't do it after you're under contract. That's the point. Don't apply for credit. That's not necessarily going to stop you from getting a loan, but it could very well delay closing. Because we're going to have to trace that down and make sure that you didn't actually get new credit that has a large payment that would affect your debt to income ratio.
I had that happen a couple times where folks are at Home Depot or whatever, and Home Depot says, hey, you want to apply for a Home Depot card, 10% off or 25% off your purchase here if you do that. And then, but suddenly, you just open a new line of credit while you're under contract.
And I mean, it's an innocent thing to do. It's not like you're like, oh yeah, that's not
that's
gonna affect
that's
anything.
part of my
but
speech.
Yeah, that's
when I sit with my clients, I tell them, visualize me standing at a lectern, and I'm sitting here with a megaphone telling you, don't apply for credit, don't move money, don't quit your job, don't change your job until the house closes.
I actually have the credit locks on mine, so that even if I accidentally slip up and say, yeah, sure,
I want to apply for that.
It just rejects
for that 5%.
They can't.
Right.
Can't run the credit.
And as this happened to you, and I'm sure it has and it will at some point in the future, Laurie, is American Furniture is one where I just about lost a deal. Where they went and bought $7,500 worth of furniture 3 days before closing, and insisted that, well, you told us it was done. I said, I also told you that until you have keys in your hand, don't do anything. I go, the loan was done, but that doesn't mean we're finished. We just had to get to closing. We fixed it. We unwound the deal at American Furniture, and we closed late. But it was definitely not fun.
I had someone borrow a truck from a dealer on good faith that after closing, and I was like, "Gee, oh man,
just wait, man."
I was gonna, Anyway, what's next?
Appraisal issues is one of those things that can happen. If you're going for an FHA or a VA loan, those come with certain stipulations where the house has to be habitable, which means there can't be any chipped or peeling paint, can't have roof tile being peeled off, can't have obvious structural deficiencies in the home, and then the seller doesn't want to fix them. Well, then you're out of luck. And I think we touched on that last week, where people are saying, look, I don't really care about the deck.
Right. That's an important one to foot stomp in this market. Even if you win, you are there's possible appraisal conditions that you need to be prepared for. So as you're walking that property, as you're writing that offer, you need to factor in, okay, that deck is going to be an issue, that paint is going to be an issue, and even if they accept your loan, doesn't mean the seller is not. If the appraiser conditions the sale on a chipped or peeling paint, or a deck needs to be refinished, or torn off,
any number of things,
right. The seller does not. I often tell my client the seller must do those things, to sell the house, but they don't have to. They don't have to
fix it, right?
No, we're not going to do that. Actually, we'll go back on the market for a cash conventional offer.
Yeah.
Right. Or you can suck it up, like we talked about last week, and just buy it as is.
Well,
more or less.
Well, you'd have to pay to fix
you'd
it,
have to pay
out of your own pocket.
Right.
Yeah.
Well, but you can't
close on it until
right.
Yeah.
And then that incurs all kinds of risk.
Yeah.
If it doesn't close for some other reason and you just dumped a bunch of money into it, that's.
And if I was the seller's agent on that property, I wouldn't allow that to happen either. I would, or as much as I could, as much as an agent can allow.
Sure.
Or not allow something, I would highly recommend against a seller allowing a buyer to do any work on the property prior to closing.
Right. You start wading into those weeds, you're gonna get in trouble.
Yeah. You very, very possibly could. I had one sort of day of closing. I walked into a house and to do the walkthrough, and there was a gentleman framing a deck in the backyard, and it was so out of place. I literally couldn't process what was happening, and then my client walked past me and walked out and started talking to that person, and I followed them out, and I said, how ironic that you know each other. You just barely moved to town, right? And I still wasn't processing what was happening, and they both look at me like I'm a moron, and because I am. And I said, wait, I'm missing something here. And did you hire him? And my client said, oh yeah, he was going to come in a couple months, but he called and had opening today. Is that a problem? I was like, potentially. We're closing in an hour, and anyway, long story short, walk into the closing 45 minutes later. And I look at the seller.
This is on the walkthrough.
Yeah, this is on the walkthrough.
Wow.
An hour before closing, and I looked at the seller and I said, "Hi, I'm Rob, and my next words were going to be, we need to talk about some work being done on your property right now." And they cut me off and said, "All I need to know is, do I have to pay for it?" And then I said, "No," and they said, "Then it's fine." Okay. Good times.
Wow.
Yikes.
Don't you just love this business? Things that happen.
I love advocating for people.
Yeah.
Communicate with your realtor.
Uh-huh.
Everything. Everything.
Communication is key. Right. And communicate with your lender, which brings me to my next point. I've had it happen on soft pulls where derogatory items suddenly show up on the credit report that I was not aware of. If you know you didn't pay a bill, if you know that the doctor's about ready to drop your account into collections, tell me now, and we can address it. We can get it fixed before it becomes an issue. Because if a collection hits 3 days before closing, which is when we do our soft pull, your credit score is going to drop significantly based on that, and it could very well drop you out of the place where you are. It will definitely affect your rate because you'll drop 50, 60, 70 points, and that will change your rate. If you go from a 680 down to a 620, your rate's going to be much different.
And if you drop below that 620 barrier, you just lost your loan.
Well, with some lenders, we go down to 580, and your rate at 580, well, I mean, you'll buy a house and you'll refinance in a couple of years. Assuming rates stay level, who knows? But yeah, please tell us, all of us lenders, if you have a problem coming up and you know about it, address it beforehand. Don't hope, because hope will always bite you, especially in our environment where we're at. Surprises are bad. And last and finally, the thing that can happen, and it's very, very rare, but it does happen. It hasn't happened to me, but programs can change. So if I qualify you under a certain guideline, so you have to have a certain amount of assets in the bank because you're buying an investment property, or you've had it's a manual underwrite, and manual underwrite loans require that you have assets in the bank so you can make 3 months. Maybe that changes from 3 to 6 months and you don't have enough in the bank. DTI changes. It could go down. It just recently went up in the last year from 45 to 50 on most loans, but it could go back down. Things could get tight again. So there are things that can happen that are outside of my control and your control as well. But most items in the loan process are under the borrower's control. And it's always good to communicate with your lender and let them know what's going on with your little world while you're doing your loan.
One thing I tell folks is do nothing. Do nothing.
Right. Do
nothing without letting the lender know. Don't make no financial purchases. No big purchases out of the ordinary pattern that you exist in.
I've scared people so much sometimes when they call me and go, Mike, I want to go grocery shopping. And I'm like, yeah, I think I'll let you do that.
Right on. Well, I mean, that's a.
I suppose you can eat.
Better to over.
No, and that's good though. I mean,
be overcautious.
Surprises are bad.
Yeah, that is bad. It could be bad. Would you add anything, Laurie? Any other?
Well, I was just thinking when you were saying, tell me everything that's on your credit report if you have something like a medical bill coming up. One thing, the reason for that is if it's about to hit collections, you might be able to call them and work out some kind of a payment option.
And I have done that.
Which will then not have that hit collections.
Correct.
And will keep your credit score up long enough until you close. After you close, do whatever you'd like.
I've actually had checks cut at closing.
Yeah.
Yeah, and sent out. I've called and negotiated with the creditor and said, look, this is what we're doing, and if you do X for me, then I will make sure you get paid.
Yeah. You don't care that they are about to, I mean, you care obviously, but your concern is not, oh no, they're about to go into collections. You're not judging them.
No, absolutely not.
You're there to make sure that they can do what they need to do so that they can close at the end of the day. So don't feel like your lender is going to judge you.
No.
Or you're going to feel so bad because you have this bill you didn't pay. Let them know because they will help you.
One of my greatest joys is actually sitting down with folks and pulling their credit report, knowing that they can't buy today and giving them a plan.
Yeah.
Sitting down with them and saying, okay, this is what you need to do. And everybody's different, so I can't come out with a scenario at the moment. But I will sit down with folks, run their credit, and have them print their bank statements and introduce them to Dave Ramsey and work out a budget and a way to get to where they can buy a house in 12 months.
Yeah.
So
don't worry about being judged.
No.
Put all your cards on the table.
We've
it's
all
the way you're going to close on a house.
Right. We've all been there. You know?
Oh, Lord. Right. Lord knows I've been there.
Yeah.
Ought to be 20.
So Mike, what's up with interest rates?
What's
going on?
We're gonna ask the 8-ball,
okay.
The crystal 8-ball, which I don't think it's. Are rates going to continue to rise? Oh, great! It is decidedly so.
Okay. Well, the 8-ball
has spoken.
Yeah. I don't think it's been wrong yet.
I don't
unfortunately.
think so. However, that said, please don't make any financial decisions based on the 8-ball. And consult a lender like Mike. Okay.
Or call the Fed.
Okay, yeah, call the Fed. Good luck with that.
Ask them.
All right. Any podcast, book, or website recommendations?
I actually have a business to recommend,
okay.
And it's called. Hold on, I'll pull it back up. 300 Days of Shine. It's a moonshine bar in Monument that I guess recently opened up in the last couple of years, and I happened to stop on a bike ride, and wow, it was really good. They had a honey moonshine, 100 proof, and take a
100 proof?
100 proof. It was very smooth.
It sounds like it.
Yeah. Were you able to ride in a straight line afterwards?
I only had one.
Okay.
He offered me a second one, and I said, no, thank you.
I think if I were to drink 100 proof something, I might die.
Well, no. Yeah.
So, yeah.
Did they just give it to you straight up, or were there did they mix it? Did they have
They have a lovely list of mixed drinks.
Interesting.
Was there a garnish with it as well?
No, I don't do training wheels. When I drink, I like to savor the actual drink itself and not.
Oh, I don't want to savor anything that's 100.
No, I'm telling you, the honey moonshine was wonderful.
Okay.
Very smooth.
All right.
Give it a gander.
So we were talking about that before the podcast. He was telling me about it, which then made me think of Ice Cave Cider House, also in Monument, where I went with a few friends couple weeks ago, and it was fun. They brew all their cider in-house, and you can get a flight of all these different flavors, and some of them are traditional and some of them are weird. They had a jalapeno one. But wow. It's like when you get a flight, you get a whole bunch of basically a little bigger, like the size of 2 shot glasses, and they bring it to you, and you get, however many you want, a sample of all the different ciders. So I was like, well, jalapeno, I'm going to get it just to try. I tried it. It was jalapeno cider. And then everybody else who was there, I'm like, you want to try some? They're like, no, we're good.
We'll take that squinching face you just made as a good...
No, but they had a variety of,
okay.
It was fun.
And what was the name of that place again?
Ice Cave Cider House.
Okay, so
it's up in Monument, and it's this cute little place, and the owners sat and chit chatted with us, and they were really nice, and it was just a fun place to hang out, have a night out with friends.
Well, you guys did fun stuff. I was gonna recommend again Adaptive Markets by Andrew Lowe.
Hey, that can be fun while you're sipping moonshine.
Yeah. And in fact, you may need it because it's a dense book. It's hard to, but yeah, Mr. Lowe talks a lot about the efficient market hypothesis, and if you're at all interested in that, exploring that topic, which seems so simple, but it is actually quite complex. And that the essential thrust of it is that the market perfectly prices all information. So, for example, the Secretary of State yesterday being replaced. In the next 90 seconds, the market priced in that information, and so it's just interesting. But your guys' were much more fun topics.
Well, next week I'll bring something.
No. That's okay. It's a good counterbalance. So I think that's it for today. Any last words?
No, sir. I'm all out of words for the day.
Okay, right on. Laurie?
We've reached our quota of words.
Fair enough. Okay. Well, thank you all, and talk to you next time.
Bye.
Thank you. Bye.